Good morning, everybody. Welcome to the Flow Show, and a bit of fun and games going on in dollar yen. As you can see there, Judge Judy wagging her finger, just like the Bank of Japan and MOF might have done as we broke above 149. Morning, Kay.
Hey, good morning, Ryan. Good morning, everybody.
Let's keep an eye on that one. So, as you can see there, a little bit of a beating. Wouldn't call that intervention per se. Maybe it is, maybe it isn't. A bit of smoothing perhaps. It looks very similar to last week when we got a similar move, as you can see around there on the 13th on Thursday. Possibly maybe just a ring around, as it's called, where they just phone up the banks to check rates. They know perfectly well what the rate is doing, but what it does is it sets the grapevine in motion. People get the call gets passed around, the chatter goes on. The Bank of Japan have phoned up to check rates, market gets nervous, thus you see that reaction, and hence why it's bounced back quickly. What that tends to do is just make traders a little more cautious. We were moving pretty high up through 149, getting up to near 30s, and then all of a sudden we're back down again, and traders are a bit more cautious now about what potentially might happen next. So keep an eye on that. There's every chance we could carry on going higher, as we did after last week's similar move, where the market just got a little bit nervous for a while and then it got back on the bus again. So just keep an eye on that. If we do move quickly back through 149, maybe up towards 149.50, maybe we get a stronger reaction from the folks over in Japan. What are you making of it, Kay?
Well, to be perfectly honest, I was grabbing a coffee when it all happened, so I haven't even seen it. But it looks like one of two things: either they checked rates, or there was a bit of a heavy hand taking profits and overloading all the algos, the bank algos. That's possible as well. Yeah, I mean, if we keep it to checking rates, this is the kind of move we can have. It did accelerate through 149, right? Just before it happened, 149 quite quickly to 149.30-ish. Yeah, I mean, I don't know. I leave it in the middle. What really happened there? Likely, they gave the call as we are getting nearer to 150. They probably saw 149, which is close enough to 150, and then they went like, oh, let's call up the folks and let them know that we are still watching this. I think this is more the case of that, or because we've seen this from experience at touchy levels like this, there could be a few heavy hands, and they know exactly how much they need to do to overload the machines and get a snowball effect there as well. So there may be a part of it in there as well. But we're back above 149. Let's assume that they checked rates. I'm also pretty convinced that they did already some smoothing, some stealth intervention, as people call it, to smooth the moves. But forces to admit that the yen is weak, and the problem for MOF is that they are not only fighting dollar yen, right? They are fighting all the yen process. ECB is raising rates, Bank of England is raising rates. Well, you name them. Everybody is raising rates, apart from them and the Chinese. And we see it. Those are the two weakest currencies right now. Dollar China went up from the 7 level 3% already higher, and dollar yen is roughly in a week's time 4% higher as well. So those are the two currencies that are now really under fire, with the rest of the dollars pretty much stabilizing. So they are not only fighting the dollar yen, right? Not only the dollar yen tends above 4%. Yes, it's linked to that. That was the bulk of the move, but then with the other central banks starting to raise rates, they have a real job on their hands to keep the yen under control. Look at pairs like euro yen, even sterling yen trading at highs. And then the commodity pairs as well. I mean, it's just a global thing where the yen getting smoked, and together with the Chinese yuan. So as long as the Bank of Japan keeps his hands still, then we are going to remain in the same pattern. So imagine that we get an intervention and they put it back to 145, for instance. As long as those as long as Bank of Japan doesn't change anything, and the Japanese government continues to put in stimulus plan after stimulus plan, we're going to have exactly the same patterns again, in my opinion. For as long as the dollar really does not does not 180. We've seen some weakness in the dollar versus various currencies, but that's not a reversal yet. What we are seeing, right? We are still well below parity in the euro dollar, still well below levels in the cable, which would be seen as really constructive, even though we're quite far from the lows, but we're still below 115, 117. Same for the other. Same for really the other pairs, all of them. If you look at the Aussie and the Kiwi, they're still like low compared to what we have seen in the past versus the dollar. So the dollar hasn't turned yet. So the problem for the yen stays in place.
Yeah, no, exactly. And Brian's put up a point. They don't think the banks are seriously devious, but there may have been some clusters of sell stops below the market. Yeah, that's always going to be the case, and you're going to get a cascade. But those sell stops are drawn all the way up. They're probably drawn all the way up from the 140s all the way up through 147s. You can pick your levels where the sell stops are. Doesn't really change the effect or the impact. Then if the BOJ are doing a phone around or they're intervening, they're not caring about the levels. They're just caring about taking the volatility out of it. That's their objective. They did that right after the first intervention. Yep, we bounced right back, but then we had that period of a couple of weeks where it did nothing. That's all they want to do: suck out the volatility and give the speculators a bit of a bloody nose, trip them out their stops, as you say. Just to teach them a bit of a lesson. But as we maintained, it's all about the volatility. It's all about the speculative impact. Dollar yen can go to 200 if need be, as long as it does it in a slow and steady manner and not against the overall fundamental picture. And as you know from the show from the last few days, we've been pointing it out, particularly last week. Dollar yen has been disconnected from some of the other pairs. It's been disconnected from US yields. US yields came off the boil, but dollar yen kept going higher. We've seen cable up, euro dollar up, Aussie dollar up, not massive, but up. And in those circumstances, you'd expect dollar yen to go the other way, but it hasn't. It's been rising as well. So that's when you start to feel that it's stepping over its boundaries, if you like. But anyway, we know the score now. We'll keep an eye on that from now on in. So right, let's start in Japan. Few things coming out. Kishida, the PM, was saying he's not thinking about changing or not thinking now about changing the government Bank of Japan accord on economic policy. I haven't read too much more into that headline, but it says it was the now part that struck me, that maybe that's something they would consider changing later. Over to Captain Charisma himself, Kuroda. He is blaming the yen fall on the rise in raw material prices, driving up inflation. He's probably got half a point there, and that's pretty much been his byline for a while now, that inflation is up. Still playing the transitory line, really. And as we know from energy prices and so on and so forth, of which Japan is a big importer, it is going to have a big impact. But as we been saying, the problem you have is how entrenched price rises become in the domestic economy. You can handle a quick spike in oil if it lasts a couple of weeks. If it lasts a few months, more than a few months, then it starts becoming entrenched, and that's the problem we've seen elsewhere and what's caught all the other countries and central banks out. It's how much is becoming entrenched into economies. He also commented that he's not going to resign either. Not sure why that would be coming up. He's only got a few months left on his term. Is there some greater pressure being put on the Bank of Japan's policies continuing to ease? We don't know. Aside from that, we've had the usual flood of government speakers out, Suzuki, all the lot of them. Still the same comments. Won't comment on the daily rate, but then spend the next half an hour commenting on the FX moves. Suzuki said he wouldn't comment on whether they're conducting stealth intervention, which is probably a green light to say that they are conducting stealth intervention. Sorry, Kay, did you?
Yeah, he was scheduled to talk in Parliament, Kuroda, and that's probably one of the opposition members of Parliament who asked him the question, like with the weak yen, trying to blame him or for his policies, and it's likely in response to one of those comments that he said something like of the likes concerning his resignation. Yeah,
cool. Thanks, mate. So yeah, all the other comments from officials have been the same. They're looking or will fight excessive speculative moves, so on and so forth. No one has actually said that these moves are speculative. If they do say that these moves are speculative, that would confirm that they are likely intervening or will be looking to hit it with a big intervention. Over to the RBNZ, because we had some data out, some CPI data out from those guys and girls over there. Let's just, chasing it around. Let's get that up. Get rid of that. So Q3 inflation from the Kiwi lot. Quarter on quarter up to 2.2% versus 1.6 expected and 1.7 prior. The year on year down a pip, but still well above expectations. Now this has caused several banks and analysts to ramp up their rate expectations now for the RBNZ, who, if the prior stories were to be believed, they only had 2 more hikes in them before pausing. We've had one of those, another one on the way. It looks like they're gonna just perhaps continue going. Their cash rate is currently 3.5%, and a 75 pip hike is now probability of 68% at the November meeting. As I say, we've had a few banks out. Kiwi Bank says they'll reach 4.5% in 2023. ASB Bank says that they see the rate peaking at 5.25%, so well above where we are now. And they see a 75 pip hike in November as well. ANZ now see a 75 pip hike in November and February. So inflation switching the deal for a lot of banks and analysts there over what the RBNZ are likely to do further on hikes. Obviously, no real impact in the Kiwi. I say obviously, ordinarily you would see an impact in the Kiwi, but I've lost it. Where is it? But given how the big fish we're frying is the US dollar, rate moves elsewhere aren't really changing the currencies that much. As Kay's mentioned a lot of times previously, you know, the rule of thumbs are out the window. Currencies aren't moving on their rate expectations, and that's particularly to be said for some of the smaller central banks. You know, if the ECB turns around with a 100 pip hike, that's something different than if the RBNZ do it. But we still keep an eye on where rates are going to go and where they're going to perhaps tip out or top out before coming down, because when things do settle down, the divergence play will come back into trading again in some of these smaller central banks and currencies. Just going across the water to the RBA, Bullock was out overnight saying further hikes are likely to be coming. But he also commented on the Aussie dollar. And he said that while everyone's looking at Aussie dollar, US dollar, on a trade weighted basis, it hasn't declined as much. I wouldn't call that a green light that it can fall further. but it means that they're not overly worried about the level of the Aussie dollar as it stands here and now. Coming to the ECB and Bundesbank's Nagel was out last night saying they must withdraw support quickly. The ECB must withdraw support quickly and not stop too early. So not really a surprise to have a German central banker coming out very hawkish. Obviously, the big fear in Germany is always inflation. Now, back over to the England. We'll start with the BOE. There was a rumour out saying that they may further delay QT past the expected date of 31st of October. We did hear yesterday that they were going to restart corporate bond sales next week, but the main bulk of QT, the FT thought that that was going to be delayed. Just before the flow show started, the Bank of England came out and said that that report was inaccurate. So QT to start up on the 31st of October. Onto the political side, obviously we had all that Chancellor Hunt stuff out during the show yesterday. He went some way to calming markets, though you wouldn't guess it by where cable's trading now. Just as we look at it, sub 113, we got all the way up to 114 yesterday. So he has calmed markets a bit. Yields have settled a bit, but we've still got this Truss issue to sort out. She's not out of the woods by any way, shape or form. There's still plots going on. There's still political gaming going on. There were stories out that Penny Mordaunt, the lady who stood in for Truss in Parliament yesterday and took a load of flack for that. One of her aides was speaking to Sunak about, you know, getting together and coming in on the same ticket, as the Yanks would call it. So there's lots of political gamesmanship going on behind the scenes. Liz Truss still looks on borrowed time. It's going to take a hell of a lot for her to turn this around. Approval ratings are through the floor. So I think it's still a case of when, not if, she goes. I'm still of the mind that Sunak will be a front runner, but Hunt could be in the frame as well, given his performance yesterday. Sunak would be the most market friendly, as I mentioned when we had the leadership contest. So if Truss goes and Sunak is in the frame, then I expect to see the pound rallying once again. But back to Hunt, and he, apart from all his reversals of the tax plans, everything, he's also put in together a 4-person economic council to offer advice. Included in one of those is ex-BOE MPC member Gert-Jan Vlieger, who some of you may or may not remember was one of the folks who were pumping for negative rates for the BOE all through the various crises that were going on. So anyway, it's an independent advisory council that's coming in there. Market may see that as something positive. Over to the US, and on the oil front, the US is potentially considering another release from the special petroleum reserves this week. We heard from Biden last week that he wants to do more on gasoline prices, and one of the tools is obviously the SPR. At the moment, we have seen gas prices in the US dropping and dropping and dropping, but also the US is depleting their SPR at a hefty whack. So that's something they'll need to be considering as well. That's all I've got on the headline front. Kay, anything you want to add?
No, really, not a lot, man. The rest is more comments than any news, really. Lots of people commenting about the yield curve and about whatever's to happen, whatever the central bank should do, but no real news apart from the fact that Russia is fighting seemingly more and more dirty war in Ukraine, which in former months would be a weight around the euro's neck, but it seems the euro is now shrugging off all the negatives that come in. It is a factor, or at least politicians or people in charge of the reserves make us believe that they are full of gas and LNG and whatever reserves right now. So the winter and the weather being a little bit warmer to start the season is driving the European gas prices lower, and there's a lot of ships waiting to come in, but the storages seem to be pretty full, and that seems to be underpinning euro crosses a little for now. So that's the other thing that I saw on the news of the past couple of days.
Yes, it was Spain, I think it was yesterday, were turning away ships carrying LNG because their storage is full. So obviously, as we know, there was a mad scramble when this all kicked off to fuel storage for winter. It seems like they're all chocker now, and typically they're turning away gas. But it's an ongoing event, and yeah, we've got I think they're calling it an Indian plume coming this week on into next week, where temperatures across Europe, even here in the UK, are going to get up into the mid-20s next week. So that'd be nice to get down the beach, but that is also a bit of help, respite for Europe before, you know, hitting a cold spell, that we get a warm spell, that they can not deplete those storages too much into winter. Obviously, if we get a real heavy winter, it's going to put pressure on the latter part of winter to see how those storage supplies hold up. But as we've discussed in the room, it's the Russian influence of gas is only around 9% now for Europe, so not a real significant number. That if they do turn it off at the height of winter, Europe will suffer too much. But all that remains to be seen, and what happens over the winter, of course. Right, where shall we start today? Well, let's go into dollar yen quickly. This, I had the level sort of 149s up here. This goes way back to just old levels, really, way back to this area here, 90s and the 80s. Just what I tend to do is have a look back at the old traffic areas to see what levels stood up then, because obviously some of these levels we haven't touched for many years. So, you know, an area of support and resistance that happened then could become one now. So that's where that 149 comes in. And it was banging its head on it a bit this morning. And then we got the break up above. Really, it's going to be about the big figures from here. 150 is the big fat number in the shop window. It's potentially going to be big always round. It's a big psychological number. We know of options action going on there as well. A lot of the market, everyone's talking about 150. So you have to be careful, because if too many people are talking about it, it paints a big target on its back, and then you can see the market flush it out, get rid of all the people who are going to be leaning against it before then reversing. So keep an eye on that. I'm probably going to tap it for a scalp short if we get up there, and maybe then fold some into my longer term position, depending how it plays out. I'll only really trade it on a first test, and depending on how it tests as well. But I wouldn't go putting my house on it, because, as I say, it is a big target, and we could see it flushed out in the first instance before it then reverses down. That can be, so we could blow through 20, 30, 40 pips before it then turns around. What are you making of this level, Kay? It's always going to be a big number, isn't it? 150, a big round number.
Oh yeah, definitely. Also, I'll share the screen in a minute. There could be, from a technical point of view, a bit of a target just around above 150. But yeah, again, we're talking about 150. At first, we should not be trading above 120. Then we should for sure not be trading above 130. 140 was crazy, and now we are at the door of 150, and we are again talking about it being a big fat level. What worries me in the market, and especially in the market that we trade in, is that most of the retail community is short dollar yen, and that worries me a little bit, because people are just, for one, the retail community is a counter trading community for a big percentage. So whenever something goes one way, the retail community likes to start to counter trade it. And for two, especially in the yen, people have not had the habit of seeing, even though the stocks are rebounding and doing a pretty severe yo-yo, but nobody has, or most of the people haven't seen S&P, for instance, come down from 4,600 to 3,500 with dollar yen rising 30 big figures, right? So it's very tough. It's tough to trade for us. I came back yesterday from a few days off, and I said, "Well, it's too high to chase," and but it's I don't know, too steady for me to go and trade against it. I wouldn't be surprised to see 150 trade up there. Perhaps the interventions, perhaps, as you say, stop run for barriers or option plays, because a lot of the Japanese corporates also have options in place to try and protect some returns in the yen, but then they will have barriers in place at certain levels, and I wouldn't be surprised that 150 is one of those levels either. So yeah, barring interventions and barring a global turnaround in the dollar as such, I'm still finding it very hard to start to counter trade all this.
Yeah, definitely. And as you can see from that chart there, the next really big technical level is that fib from the 80s, the 38.2 at 152.76. We saw that the other 38.2, the 147.35 showing up as we first made a move up there. So these big technical levels are the types of things you want to look for in that. But if you take it down to the shorter term, you know, how do you trade it here and now? Well, again, it's really going to be about the big figures. You know, we've got to move down towards that 148 level. If we get back down to the 1998 former high and that old fib level, or call it the old fib level now, that's a sort of area we're going to be looking at 67.35. If we get under there, then perhaps we've got a bit of a change, at least in this short term trend from the 145s. So that's really going to be a marker. It could be a decent support area if we get a knockdown there, as long as it's not intervention styled. That's likely to be where buyers are going to start coming in and sucking up the dips. As I say, if it's not an intervention move. An intervention move, as Kay said, we could be down to spike down to 145s, wherever. Then again, you're going to be looking at this sort of area. You've got to look at intervention at maybe somewhere in the region of 300 to 500 pips. That's what we saw previously. So just keep that in mind. That's the sort of range you're looking for. So if you're looking for stretch points where you think it's going to stop, obviously be careful catching a falling knife. But from here, 400 or 500 pips puts us, you know, pretty much banging that 144, 145 area, which looks like it could be an actual support point or stretch point for intervention. Just looking at a couple other pairs, still keep an eye on Aussie dollar. I'm long, and I think we're still undecided what we're doing down here. It's far from out the woods. As I mentioned, we did get the hold of the prior low, so we had that prior low, didn't quite get as low, having a step up. Still got to bust this 64 area, but at the moment we can't even seem to hold into the 63s at the moment. So the trend is definitely in play. The bearish trend is definitely still in play here. I'm still long. If we do break under this 61 level, then I think we're going all the way to 60. So that's where I'll be keeping an eye on. But at the moment, we've got a bit of stability, i.e. it's not breaking any further lower. So just keep an eye on that one if you're long as you don't. I know a few of the boys and girls are in the room. As mentioned, the pound looking a bit weaker today. We had a move all the way down to under 86 and a real fairly strong reversal on that. It's put us right back above 87 at the moment. So back above all these, this bit of a pivot line now coming in 87, 87, 20-ish. This is still all to do with the political noise and everything going on. So on a fundamental basis, I'm not sure what it's doing at the moment, but purely from the political side, it's just running from one side of the boat to the other. As mentioned, cable, you know, so much for yesterday's bullishness and everything's all right in the world. We're now well back down again. And as I mentioned, after we get over this political hump, it's still, the UK is still facing the same fundamental issues that every other country is: higher rates, inflation, a potentially weakening economy. And that looks to be it as well. But also, don't discount the press effect in the pound. You know, we had the press lambasting the government's mini budget, saying it's going to impact people, how it's caused mortgage rate to rise and going to cost people money. Now they've reversed 99% of it. It's still going to cost people money, according to the press. So the government can't win either way they turn it around. And that, again, is what I've been mentioning with the pound, that you can't really trust a rally just on the political stuff, because then the fundamentals are going to take over. From here, probably looking down at 112 as perhaps one of the main support points. As you can see, I've not got too much tech on here because I'm not really trading cable an awful lot with all this volatility. But certainly if we get down to the 109s, that's potentially going to be a bit of a make or break area. If we get under there, we could be heading all the way back down to the 105s, that sort of area. If we test it and hold it, then probably sideways from there, sitting in a range between that 109 and 114, 115. That's my quick overview. I shall pass the baton on to the K-Meister.
Thank you, Ryan.
Give me 1 second.
Yeah, sure, mate. In the meantime, I'll reply to Mike because he's asking whether the next intervention could be shooting for 500 or 1,000 pips. You know, I've never seen them intervene for really 10 big figures. They had some, but then we're talking back in the 90s, right, where there was a lot less money flowing in the markets. Now you're talking about a $6 trillion market every day. I don't know exactly how much of that is going through dollar-yen, but it's a fair little chunk. And shooting for 1,000 pips in a market where you're fighting against every other virtually central bank in the world, which is are raising the rates. I don't know whether they would even be possibly sending it 1,000 pips lower. And somewhere, you know what, the first intervention is always the wildest one, let's put it that way, because now everybody expects the MOF to be in at a certain point. So we saw this 100 points move like just before the flow show started, but I doubt that we would see more than 500 points unless, as I said, and I said it in the room as well, unless the dollar turns around. I mean, if the dollar would turn around and dollar-yen would not be cooperative, like, for instance, if we look at here, if the US tens would start to go back to zones under, what is this, 380-ish? If we start to go back below 380 and dollar-yen would still be hovering around here or give and take a big figure, and if they would intervene then, that would have much more of an impact to stop the move completely. So I think right here and now, for as long as we are here in the tens, and let's not forget that it's not only US yields, right? If you look at the German yields, for instance, which is what the market takes as the main driver for the European yields being the biggest economy. We went up from August in the German 10 in the Bund yield. We went up August 0.7%, and we are trading 235. And that translates in stuff like euro-yen, for instance, as well. So that's what I mean by the MOF is not only fighting the dollar, it's fighting the whole world. It's fighting all of those who raise rates right now. And because themselves, they are not raising the rates, and the Japanese government is still putting in place stimulus packages to help companies and people weather the high energy storm. So the interesting thing, what I was saying about the 150 is that I took this triangle, and when we broke above here, above 145.5, which was not too far from where we were, give and take that overshoot here, and you just add the width on. We are somewhere around 150.35, which is also, if we can see this channel or very slightly sloping wedge. Which could be a target as well. So it's good to have something relatively close to the 150 psychological level. So if we get a stop run through the level, which may be either a pure stop or Japanese corp driven or whatever may be the reason, if we get a stop run through 150 and we would end up there, that may be an interesting zone to lean against in the really short term. But again, me personally, coming back from nearly a week being off and seeing how it reacts, barring this like blip that we saw earlier today, that's not a kind of picture that tells me that dollar yen is going to reverse soon. Start to get under 147, then I may be really for the more medium term. I'm speaking, right. Start to go below 147, confirm backs up the prior highs around 145, 60, 90, and then I think there's a possibility that we start to correct in a deeper way. But for that to happen, I think US yields need to help, or we need to have a recession starting. People are arguing it started already everywhere, but everybody's in the same boat. But let's say that US data start to really turn sour, then I think we can start to see this come back down, because then we may have, if the data turns sour, on a fundamental basis, I'm not talking technically, we could see the what can happen is that yields as well as equity markets turn south, and that would be the way a recession trades really. But therefore, US need to actually get worse than the rest of the world, in my opinion.
Just before you switch, Kate, to another chart, just to add my 10 cents to the intervention stuff. The first intervention is always usually the most shocking. Remember, it cost the MOF Bank Japan 20 billion to get them that 400 odd, 500 odd pips last time. Now, probably out of that, and Kay might correct me, probably 300 pips was the Bank of Japan, and the market did the rest once it's all piling in, knowing that they're intervening. The next intervention, if they go similar, a big one, is likely to cost them quite a bit more, and it will ever increase as they do more phases of that intervention, and that's on top of whatever stealth intervention they're doing. So the shock factor is going to be less the next time, so we might see it bounce back a bit quicker. But as I say, the shock effect will lessen and lessen the more times they do it.
Yeah, the thing with interventions as well is that we never know what kind of intervention they will do. They could just go and sit on the offer, and like they did on the other side when I remember doing one for them around 105. on the way down, and they could just sit there and give orders to the market, give orders to the region banks. I don't know how many there are, but maybe 10 or 12, and just tell them like, well, I mean, offer $500 million out at 149.10, and then call me back when it's done. They might not give it to all the banks. They might keep it just to the Japanese mega banks as well. So I was just looking at the longer term as well. There's this interesting level as somewhere up in the 152s if we take this spike from 82. But then if you beyond there, there's not a lot before 157 to 160, right? 160 is the high, and I think that's the high of dollar yen, if I'm not mistaken, before the Gulf War. And then what happened then is that dollar yen went down, and that was so first of all, it went down on its own, I think due to the Gulf War, if I'm not mistaken. Is this, yeah, this is like, because it happened somewhere around, yeah, things were starting to heat up June, July, and it happened in August, in my opinion. And then it went down, but that was like when the US and Japan were having their car deal row, and US was supposedly letting dollar yen go down before they reached the deal, and here in April '95, dollar yen shot up. Just this for a little bit of trading and market history. So yeah, I mean, if we go above 150, we're talking about multiple big figures here. 152, 153 perhaps, but then yeah. And then also, if I'm not mistaken, 75, 125 is 50 big figures, and exactly that was when we were looking. This was the triangle I showed last year, was it? Yeah, last year, and I said, like, if we break through 107, 109, why not do this? Because this is a 50 big figure width. Why not go up to 155, 157? And people called me crazy at that time. And look where we are. We are closer to the target than we are to the break level. But anyway, short term, I'd say here somewhere around 150.30. Looks quite nice. Quick one on the euro. Oh, that's the cable. Yeah, the cable. As I was chatting to Mike on Mike there. Yeah, I think yesterday that was really the fixing move. It really was, and it sent euro sterling to the lows. It sent the cable to the highs. It was a pretty decent counter trade, because since then we have not broken back above this little trend line that I have now, which I'm trading off today and for as long as it holds, basically. I do think that there's a chance we are going back to the 112.30 here, bit of a FIB, and why not somewhere in the 111s. Globally, and it's a big if. But since Hunt and who actually put Sunak's plans in place with Truss at the helm, so that's a bit funny. So Sunak is actually already there without being there. He's still, I think his clear blue tie is at the dry cleaners, also ready to put on for when he takes up the job and confirms that Hunt has put his own plan in place. But yeah, there's still political unrest, data, not good, but I would say, are they really worse than anywhere else? I'm not sure. So to me, we are going to range trade a little bit, and I think that this there's a big line here which comes from. I'm going to put it in a different color, this one, because I think it's an interesting one. This one. So this level, I think, is going to be very important for cable. If ever we're going to retest it, it's low 109s. I think here this spike may have been it for this move. It would be really catastrophic if we get back down there, because I think on a second try back down here, parity won't probably hold. But I wouldn't be surprised that just below 110 is holding now. And to me, I'm going to keep an extremely close eye on 109, low 109s, in case we are going for a retest down there. So that for the cable. Euro sterling, I'm really kicking myself for not having bought this around 86 and below yesterday. As I said, it was a fixing move. I was lurking at it, and I didn't press the buttons. Okay, I had the cable, but Euro sterling was really, I think this was a bit of an overshoot. So I'd be looking for any retest to try and grab some down there. Possibly, and keep in mind what's happening. We're in the zone already, towards the 87, 40, 50, in my opinion. If it goes through there, why not go and have a retest of 88? Yeah, I mean, this to me is bit. So take the whole area, and I'm not saying we're protected, but it's to me it should hold those 85, 70s right here and now. All right, let me look at quickly a couple of other things. Interesting, Euro Canada. Okay, this 134 is now being watered down. It can't really hold below, but then we had a big spike lower down to 133, which was a prior level as well, and coming acting again. But we're closing into this 145.50-70 zone again, and if that ever would go, there may be some more difficulties for the Euro CAD to the top side. It's a double top. Keep an eye on this 145.50-70 in Euro CAD. It should be interesting. Either we reject it again, and then we could have a retest of the 134.65-85, or if oils are a bit weaker, this may have a chance of flying through this time. I think. People are asking about the Euro Kiwi. Let's have a look. First of all, Kiwi on the CPI. So this is the broken channel. Retest, back down, retest, back down, retest again overnight on the CPI, and rejected again. So this trend line is really being watched by the market. So respect that one. So we need to break above really 57 and hold to have a chance to move back up closer to 58. If it caps, then a move back down and a close under 56.35.40, I think, would be seen as relatively negative for the Kiwi. Euro Kiwi, haven't really looked at it of late, but we're seeing this channel here, and we retested the high here, capped again 173.85. This is another one here which has been respected of late. So we've got 173.85.90 top side, 172.5 on the downside to play inside. But if we would trade back in it, this could, yeah, as you say, 176, Brian, 176, 176.35 could be going up there, you know, could be going up there. Horatio, sterling Kiwi. I'm going to say one thing straight away. No idea, and actually no interest at all. But I'll have a look at it for you. As you can see, it's a blank canvas. So where are we? 4 hours. Yeah, seems enough. The issue is this that spike lower on the cable the other day when we chart sterling crosses versus how shall I call him versus otherwise volatile and less liquid currencies, we can't forget that the Kiwi market is not the biggest market you have in there in this. So it may be a little awkward to try and chart it. Here, no. Spike there, no, it doesn't work. So yeah, we are on a bit of a support here. 199 the figure. If that breaks and then get a confirmation sub 198.5, could be an interesting one here for a move back down. Top side. Uh, 20050 to start with. That shouldn't be here. 20050 to start with, and yeah, then in that if that breaks, then there's a chance we are going to revisit the highs. But yeah, indeed, I mean, interesting level here at 199 the figure. Thanks for that, Horatio. Okay, what else did I want to show you? Yeah, dollar makes, euro makes. Euro makes the euro has made a bit of a comeback, and that is putting a bit of upward pressure on all the euro crosses. And euro makes is no exception. We rallied about 1% from the opening yesterday, and now we are finding a little bit of resistance in the 1970. Think a little more around 1980, 83. My view for now has not really changed, but for the short-term trading, for me it's more like a carry trade, but for the short-term trading, it would be better if this breaks back below 1960. But for the more medium term, if you look at the overall picture, nothing has changed yet. Then I'll be looking what's happening anywhere around here to form a more definite idea of or decision. On dollar makes still sideways. Dollar rand, bit of an interesting picture. This morning we had this the broader channel, which is still very much rising, but we are far away from the edges. We did go pretty close to the top side of it last week. And now we are on the short term in the short term channel around this 1794.95. It was the low around the low of the day. So we did 1795 apparently this morning, and it bounces off it. So the market is clearly watching this trend line. So keep an eye on dollar rand. If ever this would start to go under 1794.95, we could easily do another percent or so. Why not 1.5% or so lower, or 2% lower? These things, I think we're in some range trading in silver. The market seems to respect these couple of those trend lines. We're turning around this 1875. We're actually right bang on it right now. I'm neutral. To really get going again, we need to break back above 19, 15, 17, and really it's silver, so it can move a lot. Really 1960 is going to be again the level to watch now. Gold is trading around this descending trend line, and I remember having said that already last week before I left. This looks to me that it's trading around here. There's a bit of I'm quite neutral. It's struggling. That's the least we can say. We need to get back above that 1675-85 zone to start to rally again. And until then, I still think it may struggle a little bit and trade inside the range. Keep an eye on 1640. I think that's going to be important if ever we get back down there. Oils as well. I had a big spike on the OPEC decision. And from there, we are gradually unraveling this move. So the first where we are around now, that should be a bit of a support. It's CFDs, okay? So those levels are slightly different of what the cash is trading at, and the other one will be around 82. $83 is going to be the next support. Seems like resistance is now coming in 87, 88, and 90, 89.5, 90. That for this. Right. Okay, Brian, I see you're talking about gold correlation. I haven't, because I hear a lot of people, and I just wanted to say one thing. I hear a lot of people talking about gold-yen correlation. I've been trading and market making for 35 years, and we've never, ever traded on the back of gold-yen correlation. I just wanted to get it off my chest, because I don't know where people are getting really it. I know that some people are watching it, but they are how shall I say, opportunistic correlations, which are not really working all the time. And with that, back to you, Mr. Ryan.
Thank you very much, sir. I will take just one thing before we close up shop, just to look at stocks, S&P. I was watching this 137 area, just to see where we might set up a range after we had that move down to 130 to 3,500-ish. We've got back above the 37 handle. We had this little spike up before, that came back below. We've now broken back above 37, and as you can see there, are holding it. That could be a bit significant, could mean we get a push further up to the 38s, bit of a pivot area, that 38 10 11 area. Above there, I know a lot of people are keeping their BDI on 39 as well. Again, you know, when you get a bit of volatility in these things, you can get your minor levels, but a lot of them really revolve around the big figures. So, you know, give or take for something like the S&P, you know, 10, 15 pips either side. So, you know, 38, 90, 39, 10, that sort of thing. But it's really the range setting up here. Now we're above 37, this 38, I think, is going to be quite interesting. If we don't break there, it's pretty much going to keep the bearish trend in play. And we're likely to possibly range within those fibs, basically. But if we do get a break above 38, then, you know, perhaps we are going to see a real turn in stocks, given what we've seen all year. So that's one there to keep an eye on. As ever, thank you very much for coming to the Flow Show. I hope we've given you good instruction today on the Bank of Japan, Ministry of Finance, and everything going on in the yen. Obviously, give us a thumbs up on the socials when you see the tweets about the Flow Show. Have a little retweet, spread the good word that we're doing here. As always, wish you good luck for today and the rest of the week, and we shall see you tomorrow. Thank you very much.
Thank you, Ryan. Thanks, everybody.
Cheers, Kay.